Hello, this is Connie Belden, and in this video we're going to take a look at expected cash collections, but it's going to be a little trickier because I've outlined it here to the side. Let's assume that 25% is collected in cash in the month of sale, 65% is collected the month after the sale, 10% is collected 2 months after the sale. Okay, here it gives me sales for February of 400,000, March of 430, and then up here it gives me sales for April of 470, May 670, June 230. And it wants me to determine how much cash do I expect to have coming in April, May, and June. Okay, so let's start with February sales of 400,000. So 25% would come in February. 65% would come in March. 10% would come in 2 months later in April. We're now into where we want to start with April. So February sales of 400,000, 10% is going to come in April. So that would be $40,000. Okay, so we'll bring it over to the total column here. Okay, next we're going to go to March sales. March sales are 430,000. So that means 25% will be collected in March. We don't care about that. But as we get on to April, 65% of March's 430,000 in sales will be collected in April. So I will take 430,000 times 65%. And then 2 months later is May. 10% is collected 2 months later. So again, March's sales of 430, 10% is collected 2 months later in May. So that would be 43,000. Okay, and then I'll add that up. Okay, next we'll go on to April sales of 470. 25% is collected in the current month. So of 470, 25% will be collected in April. 65% of April sales of 470 are collected in the next month. So that would be in May. And 10% of April sales are collected 2 months later. So that would be in June. So 470 April sales times 10%. So I don't know why it did it everywhere there. We'll clear it out. It should only be in this row here. Okay, so now I will add those three up. Since that was all collected in this quarter, that should equal April sales of 470. Okay, now let's go on to May. May sales are 670. 25% will be collected in May of that 670, and 65% will be collected in June. The other 10% is collected in July, so I don't care about that. Okay, so let's start with 670,000 times 25% is collected in May itself, so that's 167,500. And then 65% of May 670 is collected in June. That gives me 435,500. And again, the other 10% of the 670 is collected in July, so I don't care about that for second quarter. Okay, for June sales, 25% is collected in June. That's the only thing I care about because 65% will be collected in July, 10% in August. That is next quarter. Okay, so I will take June sales of 230 times 25%, and that gives me 57,500, and I will bring that over. Whoops, sorry, hit the wrong number there. Okay, I will now add the columns. So in April, I expect 437,000 to come in. May, 516. June 540, and I should be able to go vertically or horizontally and get the same amount for the quarter. Now for the second part, it says, okay, what would be the balance in account receivable on June 30th? Okay, well, remember, you'd have to go back 2 months to May. So 10% of May sales from 2 months ago would still need to come in. So May sales are 670 2 months ago, that's 10%. So 67,000 is still in there for May sales. Okay. For June sales, you would go back 1 month. So June sales are 230, 65% of it. So therefore 230 times 65% gives you 172,500. So therefore your balance in accounts receivable on June 30th to still be paid is 239,500. Thank you very much.